The standalone PAT for the year ending March 15 is at 226 crores as against 244 crores. For the quarter ending 31st March 2015, consolidated PAT stands at 31.96 crore and standalone PAT remains at 33.44 crores. For the quarter ended 31st March 2014, I would like to state that there was an other income which included 44 crore on account of sale of HDIL Leisure, and PAT includes 35.63 crore on account of revision of income tax as well. Hence the results are not comparable on a quarter-on-quarter basis. As far as sales and customer collections are concerned, for the quarter ended March 2015, new residential sales crossed 400 crores, representing 100% growth on a year-on-year basis. Customer collections during the quarter stands at 425 crores. Consolidated EBITDA for the quarter ended 31st March 15 stands at 35.86%. Cash flow from the operations is 277 crores compared to 246 crores in quarter 3 of 2015, which is an increase on a sequential basis of 12%. The net debt for the company for the year 2015 remains at 2,942 crores, a decline of 10.4% compared to 3,284 crores in the previous year. For the quarter ended March 2015, the debt has reduced by 112 crores. We would also like to state that during the current quarter, the company has handed over approximately 1,700 tenements to the government of Maharashtra through the Slum Rehabilitation Authority. Around 2 million square feet of TDR is expected to be generated over the next year, which will boost the cash flows from the operations. The company follows a project completion method of accounting. So if during that quarter we do not receive the final approval and the risk is not transferred to the buyer, we do not account for that income. So as such, the quarter on quarter for HDIL does not actually make sense.
Right. And in terms of the new TDR policy that has been drafted, what is your take on the same? How do you see that particular thing? Does it have any loopholes? Does it count the road bridge? And when it comes to coming up with projects, what is your take on the thing?
The draft TDR policy currently out is an objection suggestion, and I think we are going to file our objections with respect to the road width and with respect to the utilization of TDR wherever it can be used. Also the TDR being linked to the ready reckoner rates, I think that is another area where the company will have an issue. I think overall, we will see how that goes out, but the draft TDR is still a draft TDR policy. So let's see what the government of Maharashtra does on that. No, as far as the DP is concerned, the company had already received most of its approvals. The projects which were under construction are not affected at all. Some of the projects where certain reservations of road or certain other reservations have been put in, yes, we will need to see how the new DP comes out and what action has been taken by the BMC on that. But as such, for the next 2-3 years, the company's projects which are currently on track will not get affected at all.
On the housing policy that has been pitched, there are various clauses like, for instance, for standard registration fees which will go down. How do you think that benefits your side as well? How do you see that happen? So 750 area or other 750 square foot will be benefited flat. What is your view?
I think the housing policy which has come out today is a very clear-cut policy by the government of Maharashtra. They have put full emphasis on affordable housing. Anything to do with affordable housing, where our company currently is placed and is currently making endeavors into the affordable housing segment very rapidly, whether it be the Vasevirar sub-area, whether it is Panvel. I think that policy is very well thought of for the affordable housing segment. Stamp duty and all those smaller intricacies will go on, but I think we are glad to know that the government is actually focusing on affordable housing.
One question. If you would like to tell me a little more on the upcoming
the company has received approvals for its Vasevirar project, Planet HDIL or whatever we name it to be over the next year or so. We will start construction on the project over the next quarter. We will launch that project also. But looking at the current scenario of real estate, where things have not improved substantially, I think we will launch it in phases. We will see what size of apartments we have to plan, what quantum we are able to get from the market, and I think it's going to be a while before that project actually really takes off. Right? Thank you.
Alright, then that's the HDIL management detailing their numbers. Market is not likely too much. They've got details that the net debt has fallen by only around 110 crores. That's on a sequential basis, and the numbers more or less not looking very good. Management as well fairly cautious on the demand outlook, and with regard to their launches, they say that they're going to be quite careful going ahead. The stock, in fact, down at the first lower freeze. After that, it will be flex. It's down at around 10%, and then in fact it gets flex. So stock under pressure. But thanks so much, Gaurang. Thanks, Gajendra, for joining in and answering all our queries. That's all the time we do have on the show. Do remember to keep sending your stock queries by posting it on a Money Control message board. Stay tuned because closing bell comes up next.